Let me show you a stock that I recently found. But before I do, there's something else that I need to show you. It's nice to get out of the house once in a while. So, the company that I'm talking about is Argan Inc., ticker symbol AGX on the New York Stock Exchange. And this is not a high-flying, double your money in a month like Tesla or Amazon kind of stock. This is a pretty sleepy company that is a steady grower of earnings over time. So this is what their 5-year chart looks like. Bring it up. And then this is what their 1-year chart looks like. I think it's currently trading at 44 cents and change. They have about 15.65 million shares outstanding. So that puts them at about 690 million market cap. We'll just round it up to 700 for ease. So let me do a brief overview of the company, and then I'll tell you why I like it, and then we'll go over some of the risks that are involved. Argan is a holding company, and it operates primarily out of its 4 subsidiaries: Gemma Power Systems, Atlantic Projects Company, the Roberts Company, and Southern Maryland Cable, I believe. The company itself doesn't have any material fixed assets. They are the revenue generation strictly comes from the brain trust of the 1,200 employees that they have. Had to come back home to put eggs in the fridge. So, I guess I should do that first. Alright, where were we? So GPS and APC provide engineering, procurement, and construction for natural gas-fired power plants. Actually, there are other power plants too, like biomass, but the majority of their work is for the construction and project management and design of these gas-fired power plants. And what they do is they bid for the work through fixed price contracts. So if they run over on their costs, that starts eating away into their profit margins. TRC is involved in the fabrication of steel, and SMC is involved in telecommunication infrastructure. So they excavate dirt for underground cables. They're also involved in aerial cabling. For the purposes of this analysis, 3 out of the 4 subsidiaries actually don't really matter at all. TRC, the company, has already disclosed that going forward, they're not really going to generate much operating profits. They'll generate revenue, but they won't squeeze a profit out of them. SMC's revenue is pretty small as a percentage of the entire portfolio, so it's almost kind of negligible. And then APC is really their problem child. It's their international arm that they acquired way back, and they're working on this biomass power plant over up in England, up in Europe somewhere. But they've been running through so much cost overruns and overages that now they're estimating it's going to take another $36 million before they complete and finalize that contract. They're 90% of the way there, and I think recently, end of June, they just disclosed that they've settled sort of the discrepancies and disputes between the owner and an APC. And they also converted that contract from a fixed price contract to a time and materials. So I don't know if that means cost overages are no longer going to be a big factor or not. This leaves Gemma Power Systems to be the crown jewel of this company. And here's why I like Argan. So the market cap is $700 million. And when you buy the company, they have $360 million of cash and zero debt. Zero debt. So, I mean, they have like current liabilities and contract liabilities, but you know, they'll fulfill it as they do work. So if you think about this, you're buying a $700 million company, you subtract the cash, and now what you have to figure out is the rest of the company really worth $340 million? And so let's see. GPS is reporting $1.3 billion in their backlog. And here are the three projects: Guernsey Power Station, Raidsville Energy Center, and then Harrison Energy Center in West Virginia. Now, they've also won other contracts recently that they haven't placed into their backlog yet. So those are Harrison Energy Center in Ohio, Brooke County Power, and Killingly Energy Center. Why would you name a power plant Killingly? Anyways, and then finally, last but not least, Chickahominy Power Station. I'm sorry if I'm butchering these names. So there's a reason why they're not placing the last four into their backlog. They define projects in their backlog as sort of the total contract value of contracts that are considered firm, and then less the revenues that they've already earned. So the last four are not firm contracts because the financing for those contracts are not in place yet, so they can't start. Therefore, they're not putting those contracts, they're not considered firm, and it's not in their backlog. Okay, not all of these projects can be treated equally. Some have delays, others have their own unique problems. So I've categorized these projects into 4 different categories. So the first category is active. That's the Guernsey Power Station, and I'll mark it in green. This is the project that they're currently earning revenues from, and the estimated amount left on this contract is about $760 million. The next category, I'm going to call it very likely, and I'll mark it in yellow. This is the Harrison Energy Center in Ohio, the Brooke County Power, and the Killingly Energy Center. And these 3, it's hard to tell how much the contract value is because I'm not kind of an expert on power plants. But from what I can triangulate, it's about $1 billion, and I think I'm underestimating it. So these are considered very likely because all they need is the financing before they can begin. As soon as the financing is closed, they could then put these 3 projects onto their backlog and actually start construction. The next category is what I call probable, and I'll put this in blue. And that's the Raidsville Energy Center and the Harrison Energy Center. So Raidsville Energy Center is considered probable because currently there is a litigation between the developer and Duke Energy for the connection between the power plant and the grid. Duke Energy had unilaterally canceled that contract and said they didn't want to do it anymore. And I think the developers are suing for a specific performance. And at the end of June, the courts actually had ruled in favor of the developer. So I don't know if that means it's going to proceed. I'm sure there's more time that needs to go on. So that's why I put that in the probable category. And then Harrison Energy Center in West Virginia, I couldn't find any information on why the project is delayed. It might be the pandemic, it might be the financing. So I'll keep digging into that, but for now, I'm putting this in the probable because I can't find any bad news relating to it also. And the last category is uncertain, which is the Chickahominy Power Station. This one has been kind of a tough project for them, for the developer. The regulatory hurdles have been kind of crazy and long and extended. So they have their air permits now. They finally got their water permits in end of June, and that was provided by the water board. And I'm guessing that the water permit was what was necessary to finally finish their round of financing, so that now they can finally begin. And they have to secure their natural gas supply. You can't run a natural gas power plant without natural gas. So I think they have to secure the supply of that natural gas before they can actually start construction on this entire project. And that project alone, I think, is about $800 million. Oh, and the Raidsville Energy Center and Harrison Energy Center, those two, I believe the contract value combined is about $600 million. And I think I'm underestimating there too. These projects take about 2 to 3 years to complete. The bigger ones, like Guernsey Power Station and Chickahominy, would take about 3 years. And some of the smaller ones might take 2. But they earn about 10 to 15% operating margins on these projects. So when they're ramping up and they're, winding down, they earn on the lower end of the operating margins. But during the bulk of the entire earnings and the entire project, they're earning probably about 15. So let's just say overall they earn 12.5% margins. What this is saying is, for the Guernsey Power Station, they'll earn about $95 million of operating profit. And then for the very likely category, they're going to earn a combined $125 million. And then for the probable, they'll earn $75 million. And then for the uncertain, they'll earn $100 million. For a grand total of $395 million over the next 3 years. Let that sink in for a second. You're buying a company for $340 million. And from the first 3 categories, over the next 3 years, they're going to earn almost their entire market cap. In fact, they're going to earn about 87% of their market cap. And that's not including any future projects that they might win in the interim. This is just the current projects that are in their backlog. And if they figure out a way to get Chickahominy onto their backlog, then they're going to earn $395 million, or more than their entire market cap in the next 3 years. And again, that's not including any new projects that they're going to earn, which I think they likely will. So what are the risks? Obviously the pandemic. The pandemic has, delayed a lot of their projects. And with delays, there might be cost overages. And remember, these are fixed price contracts. And so as their costs increase, it's going to squeeze their margins, and if they go over their budget, the contract becomes a loss, kind of like APC. So there's also a risk that the projects never start. If the fundings don't occur or they don't close, then these projects can't start, and so they're going to have to remove them from their backlog. Another risk is natural gas prices. These power plants, they secure their natural gas ahead of time. But if natural gas prices run high, if natural gas prices spike, then these power plants might not be able to run profitably in the future, and therefore developers might decide, this isn't a profitable project. We don't want to go ahead with this project anymore. There could be a skilled labor shortage. These engineers and designers and construction managers, the operating space for this industry, my guess, is pretty small. And so talent is very rare and probably highly coveted. They do have a lot of big competitors that are worth billions of dollars. And so, their talent could be hijacked by another company. I, like you, don't know what the future holds. And, all we can do as investors is sort of balance out our risk and our reward. This company, in my opinion, you are getting a lot more reward than the risk that you're taking, and that's sort of like the best that we can do. Perhaps I should end the video with this. There is another investment group called Core Acquisitions Group, I think. They wrote a letter in June to the management of the company and also to the board. And this is what they wrote. 1 year ago, we provided you and the board with a white paper that clearly detailed how Argan can demand a price well north of $75 per share at that time, which today would be north of $90 per share, given the fact that the company has secured several contracts since we've submitted our white paper. And then they've also said this in that same letter. For the past 3 years, AGX has underperformed the market in almost every measure. Other than increasing its backlog to record levels and hoarding a tremendous amount of cash, 2 beacons of hope, the stock price has fallen from $70 per share to today's price of $40.80 in the same period. Despite EBITDA projections of $125 million to $150 million per year for the next 4 years, based on the disclosed backlog and signed contracts, no debt, and $364 million in cash. So this company, Core Acquisition Group, thinks that the shares last year were worth about 75, and now currently this year with all the contract wins, that it's going to be worth about $90 a share. And they had EBITDA projections of, $125 million to $150 million per year. And that lands pretty close to what I'm estimating. Their estimates are a little higher than mine. But again, I also think that I'm underestimating my contract values. So this company is going to be earning a huge amount of cash flow for the next 3 or 4 years, given the $340 million of non-cash market cap that you're paying for. So I hope you found this video interesting. If you like the content, go ahead and smash that like button, hit subscribe, ring that little bell thingy underneath, and I will try to make more videos just like this. Thank you.